Hi, my name is Danielle Wiggins, and I'm a junior at Lamar University studying nutrition. Today, I was going to speak with you about the credit card industry. The credit card industry is growing every day, so I wanted to talk to you about some important things. First off, what is a credit card? How do credit card companies make their money? College students and credit cards, and how to keep your credit balance low. A credit card is a small plastic card looking very similar to a debit card, but it actually allows you to borrow money from a bank or a business and pay back the balance each month. MasterCard claims that the first credit card was called Charge It. Charge It was introduced in 1946 by John Biggins in Brooklyn. When customers used it for a purchase, the bill was forwarded to Biggins Bank. The bank would then reimburse the merchant and obtain a payment from the cardholder. Some people wonder how credit cards make all their money. The main way credit card companies make money is on interest. They collect interest each month on people who do not pay their loan balances in full. Think about this. In April 2014, the average American household held $15,191 in credit card debt. At the same time, the average credit card interest rate was around 15%. Say you began 2014 with a credit card debt level that's the same as the national average, and you're using a card that charges the national average interest rate. If you are only making the minimum payment on your card, 6 months into the year, you will have paid your credit card issuer about $1,100 in interest only. Credit cards also make money in different ways, starting with annual fees. These are fees that customers pay every year in order to keep their accounts open. Not all credit companies charge annual fees, but some do. Cash advance fees. Issuers charge these fees when a customer takes a cash advance from their cards. A cash advance is when you take your credit card to an ATM and take out cash like a debit card. Most of these charges run between 2 and 5% of the amount of the cash borrowed. Balance transfer fees. These fees are assessed when you move debt from one card to another. The fee is usually charged on the card that you're transferring the balance to. Most banks charge 3% of the total balance transferred. Late fees. Making a late credit card payment is costly. Most credit cards companies charge $25 for the first offense and $35 for a subsequent late payment. College students and credit cards. Recent studies show that the Credit Card Act slowed the rate of college students obtaining credit cards. Most students now must at least be 21 years old unless they have a cosigner or they are able to show a significant amount of income. With the new Credit Card Act reducing the availability for students to obtain credit cards, the amount of student debt on cards has significantly been reduced. How to keep your credit balance low. Pay on time to avoid late fees. Be on the lookout for new fees. Try to pay back your balance as quickly as possible to avoid taking on so much interest. And make sure that your balance is less than 35% of your credit line.